Good morning to you on the business desk at this hour. We bring you more reaction to South Africa's grey listing. Now, the Financial Action Task Force wants 8 strategic deficiencies to be removed by no later than January of 2025. That the country has been grey listed means that it faces increased monitoring over matters including suspicious cross-border transactions and proliferation of financing for failing to have the adequate anti-money laundering and counter-terrorism measures. Product Director at Morningstar Investment Management, Francis Marais, speaks to us about this now. Thank you so much for your time, Francis. On Friday, when the announcement came, it didn't really come as a shock. So the interesting part now that we need to look forward to in South Africa is how the state is looking to reverse this decision. There is a period of between 1 to 3 years, and National Treasury has said that they want to do this as quickly as possible. What are your views on that front?
Yeah, you're right. I would hope that we attend to this as quickly as possible. Clearly, the longer we stay on this list, the more detrimental it would be to South Africa, especially from an economic growth perspective and capital flows. Research has shown that it has indeed a negative effect on capital flows, specifically foreign direct investments. And we all well know that our president has been very hard at work trying to get overseas and international investors to invest in our country. So the quicker we get off this list, the better. Having said that, if you look at some of the markets, from a market perspective, I think most of it has been priced in, and we would not expect too much on that side happening from financial assets.
What is also under the spotlight, Francis, now is with regards to how much of this could have been avoided, particularly because South Africa has been in the know about the FATF's concerns for over 3 years, but action in terms of building towards regulation and passing laws in Parliament only started effectively last year. How then is the reaction to South Africa having dragged its feet to get to the eventuality that we find ourselves in?
It's disappointing, but I mean, if you're a South African, there's a long list of stuff that we can be disappointed about, right? The government, to government's credit, has done quite a number of things to address some of the concerns. I guess from my perspective, the grey listing date was sort of a carrot, and we did see some significant work happening behind the scenes and in Parliament to address some of the issues. Now that we have been grey listed, I'm sort of concerned that it's happened now, and now there's less of an incentive for government to get off this list or to make the necessary recommendations, to implement the necessary recommendations. So let's hope that government really looks at this. It seems from what I've seen from some of the other state departments, institutions, that they are really serious about getting off this list. I think it's in SARS, for instance, their interest to get some of these things in order, because they obviously want a stop to illicit financial flows. They want the tax. So there are multiple incentives. Let's hope that with everything else happening in the country and all the other priorities, that we do get off this list as quickly as possible.
You mentioned earlier that much of the negative reaction here has been priced into market activity, but at a tangible level and a practical one, because we know that the impact is not going to be overnight, and to the level that it speaks to economic growth impediments in South Africa. How do those two correlate, especially because with a long-term view, for the ordinary South African, it may not make a difference today, last week Friday, or in the next 2 to 3 years?
Yeah, I think it's definitely going to increase or decrease the ease with which we can do transactions with financial institutions, especially in the rest of the world and especially Europe. It's going to increase the cost and also the turnaround time. So a lot of the institutions will take longer. That's obviously a cost for the normal consumer and investor. It will also obviously lead to, as I said, capital flows could be negatively impacted, especially the longer we stay on this list, the more severe and the real the impact will be. We need foreign direct investments. We haven't seen a lot of that happening, so this is just another thing that prohibits that or makes it a bit more difficult. We might also see foreign investors just not going through all the effort of increased compliance checks, etc., and avoid us as an investment destination. So these are all negative things, and I suspect that the longer we stay on this list, the more tangible the effects of the grey listing would become. Over the short term, maybe not so much.
Thank you so much for your insights. Francis Marais is with Morningstar Investments talking to us in that continued reaction to South Africa being grey-listed.